Hello everyone, welcome to another lovely episode from JayFx House. On today's episode, we will focus on some reasons why SMC can fail. All right, so a lot of people have been asking me, how do you keep your consistency going? And what are the major factors to keep in mind when you're looking for a POI? And I've shared this a couple of times, but some people still make some obvious mistake on SMC, which could lead to you having reactions of your SLs. Okay, so on today's section, I'm going to be teaching you guys how to identify um, a, a proper POI. Mainly note the major reasons why you keep picking the wrong POIs and getting stuffed out, and why SMC is not working for you. All right, so this is GBP which we'll be using for our case study today. And I'll be using this chart to show you some reasons why your SMC is probably not working, or what you're doing wrong in your trading that keeps getting you stuffed out. Now, SMC is a very simplified method of trading, but can be very complex if you get swapped out on the wrong information. Okay, so SMC is very wide. As simple as it is, it's very wide and has a lot of mentors out there who explain it in their own terms. And you could get the wrong idea of someone who is not really good in educating, or is not really good in communicating with people. And this could lead to you picking some wrong criteria in a particular trade and getting you stopped out. Now, SMC in particular has its own criteria for internal range and external range, and also has its own criteria for scalping, has its own criteria for swing trading, and the rest of all. So you putting the wrong informations at the wrong time could lead to you having some serious bad trades and could lead to you losing some monies. Now, I'm going to show you one of the major reasons why SMC don't fail. And the first of them is market structure. All right. Now, a lot of people don't know how to pay attention to the range of the correct structure at the right time, because we have multiple ranges coming from multiple time frames, and this could lead to confusions. And it could also lead to you picking the wrong range at the wrong time, and also picking the right range at the wrong time, which could lead to you losing some money. Now, these are some factors which can be explained individually for proper education. I do that every weekend with my mentees, but I'm just going to try to compress this knowledge into maybe a 20-minute video so you could have a little idea on how you could neglect um, the wrong structure at the right time. All right, now we understand that structure moves in a zigzag form, right? And within each of these structure, we're always having a new one forming within them. Now, having the wrong idea on which one is correct or which to follow could lead to you having the wrong POI at the right time. Okay, and that could lead to you getting stuff out, because as we understand, these little structures within each range are known as the internal range stability of that range. And now price pulling back into this range means it's coming back to clear out these highs. The same thing happens here and here. So if you end up picking these highs as your POIs, you might get stopped out. Right? The most efficient one to pick is always the extreme or that at premium level. But picking POIs is a criteria on its own, which I have broken down in a different video on the playlist. You can go check that out and study how to pick a POI. But you picking a wrong POI within the internal range can lead to you having a bad SMC. All right, this could lead to you having the wrong trade at the right time, and also having the right trend in place, but at the same time picking the wrong POI, leading to your SMC getting stopped out and price moving in your direction. Now, some examples where this can happen over here. Now, as you can see, this was an extreme POI. On the higher time frame would obviously be another block, but we don't have time to go confirm that, so I'm just going to highlight this for you. And as you can see, that was the extreme which broke this high, right? But what's the external structure we see over here? We have this, right? So the most efficient low, swing low would be this. But at the same time, what do we see? This was kind of like the last low that pushed into premium of this newly formed range, because as we can see over here, we had a break of structure from here, more like a week, right? A stop hunt. But at the same time, price pulled back and then gave a stop hunt before a break of structure. Okay, this stop hunt right here is one of the criteria of picking a strong low, right? stop hunt, breaks the high that creates it to form a new high. That's kind of like a criteria for a strong low. So which is a strong low we have right there? Would be this. All right, so this low is obviously an internal range low because this would be an internal range structure within this leg. All right, now you picking this might lead to you getting stopped out. Right? And then that could lead to confusion in your SMC, and you're like, what went wrong? You had the inducement over here, you had the POI picked correctly, you're following the trend, but you still got stopped out. All right, this could lead to you having a bad SMC and also lead to you losing some money. Okay, that's one of the reasons why SMC can fail, and that is you picking an internal range low within the range. Second reason why SMC can fail you is neglecting the fundamentals. All right, one thing you have to understand is Forex doesn't just move on technical analysis. We also have the fundamentals, the sentimentals, and so on and so forth. But you should understand that two of the most important types of analysis we have is the fundamentals and the technicals. All right, so if you always neglect the fundamentals, you might be caught up in a situation where price is reacting from a fundamental news, and then you are busy following the structure, which is against the fundamentals. And this could be a high impact news that could lead to you picking the wrong POI or the wrong direction of the trend at the right time. All right, now as you can see, this is a perfect POI, right? But then at the same time, it did not break structure yet, but had a reaction like this. And I could tell you for a fact, high momentum like this have been done by fundamentals. All right. Now, you having this and having your entry at this point is you following fundamentals and being in the right direction. All right. But what if you had something like this? Let's see. All right. There we go. Let's say you had this extreme high picked as a POI, and then I can tell you for a fact this is also a fundamental reaction, and then you had this picked as a POI. Of course, you can see we broke the low which created it. We stopped out this high, and then went lower to break the low. So this is kind of like a strong high. But what happened? We had a reaction, and then price range a little bit before the fundamentals came in to kick us all out. Now this could lead to a stop hunt that could make you start wondering why is your SMC not working. So fundamentals is one of the key reasons why you should never is one of the key reasons why you should never neglect the fundamentals and always pay attention to what's happening within the news, and also know when to stay away from the chart, to let the news do its thing, or when to actually play in the direction of the news. All right. News comes in individual pairs, individual currencies. So if you are trading the Euro USD, it's better you always pay attention to what's coming in on the Euro and what's coming in on the USD. All right, that could help you to understand what's going to be happening in the next few reactions from the fundamentals. All right, that's one of the reasons why SMC can fail. So if you are always neglecting what's happening on the fundamentals and just sticking to structures, you can also get clicked. All right, so now on the third reason why SMC can fail, I'm going to just give you guys 3 quick reasons. All right, you could go study SMC yourself using the previous videos I've created to also understand some of the reasons why this can fail. And I could also list them out for you, but I'm not going to explain all of that so we don't get the video, too long and not easy to understand. Okay. Now, one of the reasons why SMC can fail is neglecting the strong highs and weak lows. All right. I've always been speaking about this is because it's extremely important for you to understand which high is strong and which high is weak and which high is worth risking your money on. All right. And the same thing goes for the low. If you don't understand where the strong highs and the strong lows are in, you might end up getting the one guy there from the trades and missing out on a lot of things. Now, as you can see, an example over here, we had another block, and then you could say this low, whether this high, this is structure, and then we had this break. So you could say this is a break of structure. You could also say this is a break of structure. But at the same time, this is not a strong high, because if you look into the extreme or the external structure, you can clearly see that this was a higher high, higher low, higher high, and this created a higher low. All right, so this is clearly a bullish structure, and this is actually an extreme high and external liquidity, which the current range is heading to clear out. And as you can see, if you pay attention to the right structures and know which is the strong and the weak, you would also see that price is actually clearing out liquidity from here and is actually breaking structure to continue the trend. Okay, so you neglecting the strong highs and strong lows could lead to SMC not working for you, and then lead to you, having multiple losses and blowing up your account. Now, you should also understand that SMC it's a strategy, all right, not just a concept. It's a strategy on its own, and it helps you to also, put some certain concepts together to actually give you the perfect, or you could say a very, very high probability strategy, right? SMC is a lovely concept. It's a concept that is very, very simplified, is very understandable, but you should also understand that having multiple people explain what SMC is to you could also get this knowledge confused in your head and lead to you having multiple losses. Okay, so always make sure whenever you're trading or whatever you're doing, you're using a very simplified method to learn SMC. This is very important because it could also lead to you having so many different ideas on a particular concept and could lead to you doing the wrong thing. All right. Most of us understand another block can give you a perfect version on SMC, but at the same time, you could make a very big mistake by picking the wrong order block and even at the swing low. All right. These criteria are also known as SMC. All right. So you can know most of these stuffs by following one method. All right. You don't have to watch multiple videos over and over again from different people, and that would only get your knowledge about other block messed up. I don't know if you understand what I mean, but what I'm trying to tell you is that try to stick to a more simplified method of trading instead of going from one to another, trying to look for what you already know. All right, it's just complex in your head because you have so many people explaining it in different ways. This could also lead to SMC failing. All right, this is one of the reasons SMC do fail. So most of them are clearly misunderstandings. All right, these are misinformations, and these are you're a human. All right, we're humans, and we could get the one concept from the right thing. But one of the things I've noticed is that when you intend to stick to one knowledge from SMC, like another block, it could mess up a lot of things for you. All right, because SMC is not is a concept. It's called smart money concepts. These are concepts put together, not just one. So if you pick just other block from SMC and try to trade them, it could lead to you having the wrong idea of what SMC is and just picking out other blocks over and over again. All right. So I would advise you all to go into studying it in depth instead of just having a little idea of it and then moving to your live chats. This will lead to you making a couple of mistakes and leading to you losing your account. Now, using the wrong knowledge, the right knowledge at the wrong time will lead to a lot of mistakes, like using sections on the higher time frame. That is as good as nothing. Okay, it won't do anything for you. It's not useful on the higher time frame. It's only done and useful for those who are intraday traders. Right? Imagine you being a swing trader who is planning to take entries from the forward time frame and also understand just the higher time frame, and then you're busy studying sections on how to take trades on London section or how London section works. Right? It's not important for you, and having the right knowledge at the wrong time will lead to SMC not working for you. All right, these are some reasons, all right, why SMC doesn't work and why you are having so many losses in your trades. Okay, you could use your time to correct this. I've listed out a couple of topics that could lead to SMC not working. You could take out your time to fish them out from the video, watch this over again, try to understand it more, and then send me your feedbacks on what you think. Thank you all. Keep your likes coming, keep the comments coming, and we will keep dropping such videos like this with time. All right, thank you all for watching. I hope this is educative for you. See you next time.